Good afternoon, good morning, everyone. Hope you're doing well. I'm super excited to be on the show with another amazing guest, Bilal from BD Investing. Welcome to the show, Bilal.
Hey man, Mo, thanks for inviting me here, man. I'm excited to do this.
It's my pleasure. I've been waiting for this to happen, and I'm so glad that you were so flexible, accommodating meeting with me on a Canadian holiday. So I appreciate that. So, for those of you who may not know you, Bilal, why don't you introduce yourself to our audience?
Yeah, no problem. So, hi guys, my name is Bilal. I'm known as BD Investing and also Canadian Stocks. And I started off my, I guess you would say my fame or whatever on Instagram and TikTok. This started back in 2020 during I was bored at home and everyone was on TikTok and I didn't want to start dancing on TikTok to go viral. So instead, what I did was I started talking about stocks, which I feel like I know enough of, and from there, here we are.
That time of the year, I think, was a perfect opportunity to kind of explore some of the areas that you're passionate about and use the time that we all had in our hands to do something productive and meaningful. So I'm glad that you started your journey there. Uh, what kind of triggered that whole idea of investing? Because I think ever since, of course, you're communicating with your audience, but also you're more dabbling more heavily into the stock market. And I believe you're also an ambassador for Blossom. Tell us a little bit more what triggered you to go about all that path, and what do you think of Blossom as a whole as well?
Okay, so I first started investing in 2017, and that pretty much happened when I started getting more into the work field. So I started saving money, and I believe I was around 21 at that time. And you don't have a lot of expenses. I was living with family. I was living with family, living at home. So I didn't have too much expenses. So I was saving a lot of money, and I was doing pretty well for a 21-year-old. Eventually you save money and you start looking into avenues of how to make more money, right? Because you can only buy so much, so many shoes, so many clothes, so many video games, right? And I think I picked up this book called Rich Dad Poor Dad. I'm pretty sure you've read it too.
Mm-hmm.
And he had this one segment on dividends and investing. And then I always thought, like, I saw stock market and I'm just like, ooh, red flag, stock market scam. But I said, let me give it a chance. And I Googled it, looked into it more, watched YouTube videos, obviously watched our Brandon Beavis Canadian t-shirt and other guys in the US like Andre Gik and those guys. And I got more intrigued into the stock market and I made my first move in 2017. So I started investing with robo advisors. Are you
Mm-hmm.
familiar with that? Like
Yeah, that's
Wealthsimple's.
how I started too.
Yeah, well, that's how everyone starts because you don't know what you're doing. Even though I learned as much as I could, the good thing was I wasn't confident in my abilities, which is sometimes good. So what I did was I chose to go with a robo advisor like Wealthsimple Invest, and so I did that. But I also decided to buy one stock, and that was Apple, and that was a
Mhm.
very obvious one back in the day at 21. I didn't know any other company except for Apple and Coca-Cola, so I bought those two stocks and I sold Coca-Cola, but I still own a couple of shares of Apple and it's doing very well for me. I've returned 300% and I did
Wow.
that on Interactive Brokers. But anyways, I had that money in Wealthsimple and I eventually, I kept learning, kept learning. And I believe in 2019 or 2018 or 2019, I got more into the stock market and I started stock picking myself. I pulled out all my money from the robo advisor account and I just put it all into individual stocks and ETFs. Now, with I believe you asked me about Blossom. What do I
Yeah.
think about that? I think I'm lucky enough to be one of the first ambassadors for Blossom. And how that started was I think Brandon and Max saw my TikToks, and my TikToks at that time were very I'd say like I would put like a lot of hip hop music into them, and it was engaging more to the younger audience.
Mhm.
And I think they really liked that part of me of trying to engage with the younger audience, and they brought me along. And honestly, it's been one of the best decisions. We just finished a Blossom Canada wide tour. I was lucky enough to go to the Calgary one and Toronto, my hometown. And you know what? I stand behind Blossom. I've invested my own money in Blossom because I believe in their goal and what they're trying to achieve. And the number one thing I love about Blossom, which everyone does, is transparency, right? You see
Mhm.
all us ambassadors, we have our portfolios on there, and you get to see how if we're talking the talk or if we just are we walking the walk, right? Some people say, hey, I'd like to dollar cost average and I like to buy when the market crashes, but you get to see if people are really scared or are they actually doing what they preach, right? And I think majority of my followers and my Discord members, what they really appreciate is when I actually say, hey, I'm buying this stock. You can see on Blossom, I'm buying this stock. And when the market crash, and we spend a lot of time preaching, hey, the market's crashing, you got to invest, you got to buy the dip. And you don't see a lot of people buying the dip. Well, you saw me buying the dip since last year, beginning of the year too. And I think a lot of my followers appreciate and respect that, even though I may not be one of the best performers on Blossom, you can still appreciate the fact that, hey, I give my opinions and I do what I say, right?
Yeah, you're that I think you put your money where your mouth is, and pretty much transparency, sharing what you're doing and you intend to do, what your thought process behind it is, and at the end of the day, also proceeding with that. Before we get on this kind of episode, I gave an opportunity to some of our fellow friends on Blossom to ask you a few like a fan kind of questions, and I'm gonna ask you a few of those, maybe combining two of them together because they're kind of interrelated. Phil and Nilkanth were asking around your specific strategy or set of rules for portfolio. What is kind of the strategy you take as you're trying to analyze a company and deciding to invest in the stock? If you can touch on that, that would be fantastic.
So my main portfolio strategy is called a hybrid strategy. So what I try to achieve with that is I try to get 60% in dividend stocks and 40% in tech growth and speculative plays. So I am, for the most part, I am a dividend investor, but I am young, so I try to aim for more growth. And when I go for growth, I don't go for the weak growth. I go for very risky growth stocks. And certain examples for that are like SoFi, Airbnb, Square, and of course Google, just as a stable point, right? When I choose how I choose to analyze companies, it's pretty obvious. So what I tell my students is put yourself in the shoes of the company. So if you were a company, what's the most important thing about a company? It's making money, right? So the most important factors to look at is profit margins, and I really like to look at the profit margins, the operating margins, return on invested capital, ROI. All those metrics are very important. I don't think many people, it's obvious, but many people don't look at these profit margins, right? These variants. But another important factor I like to look at is the cash versus debt ratio. If the cash, I like companies with a lot of cash on their position and not extreme. Like every company is gonna have debt, but I like to keep a certain healthy amount of debt. And let's say a company were to have $50 million in cash, and they had 10 million in debt, or maybe they even had 100 million in debt. I gotta at least make sure the revenue is covering the debt in 1 year, right? So if the revenue can be at least 100 million or 120 or somewhere close to cover the debt, then I wouldn't be too worried in investing in those companies.
What are some of your biggest lessons, or maybe one of the biggest lessons that you can share with our viewers?
So because I started off as an investor, and then I eventually became a trader and then an options trader. So I've been in almost every part of the market, and there's been a lot of lessons, Mo, a lot of lessons. So I guess, okay, so one thing I would say is respect the market. Like respect the market. Like the market gives and the market takes. I think a lot of people just look at the market as a way to get rich, and that's not what it is, right? But one of the main lessons I would say is you have to ignore the noise, and you have to have some discipline, especially when it comes to investing and long-term investing. A lot of people, they see one news and they start becoming day traders. So I see a lot of long-term investors. Hey, you're talking about the next 10, 20 years. Why are you worried if Apple missed earnings? Why are you worried if interest rates are high? They're not going to be high for the next 30 years. So it's like I say, a lot of long-term investors, they turn into day traders the way they panic. And another piece of advice I would say is, and when you see the market down 20, 30%, and then you have certain people on Blossom or social media saying, hey, I think the market's going to crash another 20%, that is probably one of the biggest buy signals. And I think I saw that last year when the market was, our NASDAQ was down 30%. And you had Meta down 60%, and people were saying Meta can go down to $10, $20. I was like, oh yeah, you think Meta's gonna go down to $20? Hit the buy signal right there. So that's pretty much it. Don't give in to the panic. And it's the best thing what Warren Buffett says, right? Be greedy when others are fearful, and be fearful when others are greedy. So
And what is your biggest advice then, along the same lines, Bilaal, to investors who are new? Like, we have so many of folks on Blossom that they're just getting started, they're getting their feet wet, and a lot of times they're asking, hey, what should I do? Where should I start? What would be your like biggest advice to them?
my biggest advice to new investors is start early and start fast. And what that means is, don't like a lot of us, we like to overthink on the most simplest stocks and ETFs. So if we have a ETF like VFE or VDY, these are very good ETFs that are invested in the Canadian markets and the US top 500 companies. And I see a lot of individuals that have to do a month of research and even personally ask me, what do you think of VFV stock? I'm like, don't ask me about ETFs, because these are so heavily diversified and they're made for people to invest long term. So don't overthink on ETFs. If you like that ETF and you like what it holds, which is Apple, Tesla, and VDY holds the Canadian banks, and if you like the Canadian banks or these top 500 US companies, then just buy it. Don't take a week to ponder on it. And especially when it comes to blue chip companies, I understand sometimes you might want to do your research on Apple and you might want to do your research on TD Bank, but don't lose your sleep over it. And that's my biggest advice to beginner investors.
You brought up the topic of ETFs, and that's the style of my investing. I've actually, when
I
I
see that.
started
I saw
first
that.
started with robo-advisor, then at one point I was similar to you, like picking stocks, then transitioned to ETFs, and now like I think took it to the whole next level. I'm following some of the discussions and whatnot. Now it's a pretty much 90, I would say 92% of my investments in all-in-one ETFs. And that's a question actually Ayush brought up on Blossom. He's asking, what are your thoughts and Bilal's thoughts on 100% index funds ETFs portfolio?
So great question. So I think I did see that question. You're in XEQT. Is
Yes.
that the one you're?
Yeah.
Nice, awesome. So it's a very good question, and you know what? My answer might actually surprise some of you guys, because I am actually a firm believer of ETFs, and if I could go back, or in the future, what I would want to do if I had a lot of capital to allocate, then I would definitely choose to go into 100% ETFs, because you know what? You don't lose sleep. It's way, I would say, safer for your money, especially if you're investing over 200 to 500,000 to even $1 million. So my plan in the future, and I have told a lot of my Discord group members, and I think I've said it on Instagram before too, that if I were to ever accumulate, $500,000, I think I would probably invest 70% of that into ETFs, and the rest I would choose stock. I would pick stocks. So yeah, I say if you want to do 100% in ETFs, go for it. I think that's actually a very great idea. You save a lot of time. You don't you don't lose sleep, and I think it's a great strategy.
Yeah, I can attest to that. Not losing sleep and sleeping comfortably at night for sure.
Yeah,
That's
yeah.
definitely rank two for me.
But I mean, it has to be a great ETF. You can't like I
That's true.
wouldn't go into covered call ETFs, or it has to be one of the more diversified ETFs. I think XEQT is actually amazing. That's on one of my it's on my watch list. But I would probably choose an index fund ETF, the S&P 500, Nasdaq, even the TSX XIC. But yeah, that's a great strategy.
There was one question by Raj asking, why do you think, Bilal, Canadians prefer to invest more in Canadian stocks and ETF instead of US? Like essentially referring to that Canadian home investment bias kind of concept.
I think that's just what it is. Some people just love Canada, so the fact that they would choose to do that. Me personally, I'm different. I just go where the money is. I like
Mhm.
the main reason why I choose to invest in Canadian stocks. I think my portfolio is made of 60% of Canadian stocks, and the reason why I would do that, number one, is the dividend income is just great from Canadian stocks, and also, we don't get taxed on it if it's in your TFSA. Number two, I find Canadian stocks very safe, just in my own opinion. Like, I don't ever lose sleep on watching my Canadian stocks go down, because I know eventually, like, they'll bounce back. We don't have too much, I would say, like, scammy vibes in the Canadian markets. Like, it's for the most part, it's pretty safe, and it's ruled out very fairly, I would say. But I think one of the main reasons why people invest in Canadian stocks is just for the safety versus US, because US is very, volatile.
Mhm. And possibly even some of that familiarity, especially if you're new to investing in like more about the country where you live in. Like you heard about all those businesses and you probably relate more to them. Who
Yeah.
do you look up most these days in whether I would say probably in the world of finance investing? Are there some icons that
Mm.
you look up to them?
Ever since the whole 2021 bubble, once it popped, I stopped watching a lot of YouTubers, just because I didn't want their bias on mine. You had some people bullish, you had some people bearish, so I stopped watching I stopped watching any I stopped watching any YouTubers for the most part, but lately I've been very intrigued with Ray Dalio. Are you familiar with Ray Dalio?
Yeah, yeah.
Yeah, so he's one of the greatest hedge fund guys, right? Managers. And I've been reading his book, The Principles. He also has another book called Debt Crisis, and I watch a lot of his videos, and I really like his investment strategy, which is, hey, forget everything else, look at the profit margins. If the profit margins are great, the revenue is going up, that's what you go for. And so far it's been pretty great. I mean, I used that same strategy with Airbnb, and that stock has gained me almost 36% because their revenue and their profit margins were high. Meanwhile, their debt was very low, and a lot of people questioned that when I decided to buy Airbnb. But hey, people lie, but numbers don't lie, right? And Ray Dalio is a very smart guy, man, and a lot of knowledge. And it looks like he's at that part of his life where he's not trying to sell you anything, and he's just trying to offload his knowledge. And yeah, I like that. What about you, Mo? I want to know, who are you watching and listening to?
These days I would say Ben Felix a lot more, and Justin Bender. I think those are the two that, and I think it's probably some of the reasons is that I think as humans we tend to gravitate towards kind of thought processes or like ideas that resonate with us. I think it's just we have that internal bias, and
Uh-huh.
even for me, like because like of course I'm investing in all-in-one ETFs, and Justin Bender and like the Ben Felix, they are huge advocates of that. I'm not saying they're only advocating for that, but I mean the way that they talk about it, it resonates with me, and perhaps it's part of my style of investing, that I like to be more factual. So I love that, for example, Ben Felix, he does a ton of research. Sometimes it may be a little bit over the top, like maybe extensive research, but it resonates with me, and that's why I like that.
Hey,
Yeah,
some people like watching other people do research. I've noticed that, but
yeah.
it's definitely makes you feel more safe in a sense when you see people doing research on that.
Yeah, we may not have talked about it exactly, but personal finance is personal, and at the end of the day, it's your portfolio, right? So how you feel, like you feel better about your investment approach, what makes you comfortable around the projections of this portfolio, and your long-term beliefs. So for example, you did mention a few companies that you do see that vision of why like they are going to do well over the next several years, and that's why you're patient and you don't mind. In fact, if the value of that price goes down, you see that as a more of a buying opportunity, whereas for somebody else they might panic. Oh no, no,
Yeah.
I'm gonna sell. I'm gonna get out of it, and that's where it I think makes a difference, huge difference ultimately. I think a lot of times, if patient
Yeah.
investors might get rewarded as long as they have picked the right, of course, company and business to invest in.
Yeah, yeah, exactly. I think patience is I think a lot of people need to learn patience and delayed gratification.
Yeah,
Delayed gratification is very important, and I always preach this to people that I meet, especially when I met a lot in the Blossom events. I said one way to develop delayed gratification is going to the gym or following a diet, or because these things take a long time. Like trying to lose weight takes a long time, but if you stick to it, you see the results, and you get your reward. It's the same thing with investing, right? One day your stock's up 10%, and then the next 6 months it can be down 2% every day. Every day you see it going down 60%. Boom, some great news comes. You're finally in the money for your stocks. Go 60%. This is delayed gratification. I think a lot of people need to develop this kind of habit.
thank you so much, Bilal. I really,
Yeah.
really appreciate it. It's been such a fun talking to you. You're so personal, so relatable, and obviously you've been so successful as well, Bilal. Kudos to you.
Trying.
Building that followership for you yourself on TikTok, working with Blossom earlier on the call as well. You did also touch on that, how that whole journey came in, and you touched on that throughout that video. I'm really super happy to have had the opportunity to talk to you. I hope we continue to stay in touch. And I always also very diligently follow your content as well on Blossom. So keep on doing what you're doing. It's
Awesome, man.
fantastic.
Awesome, man. Thanks, yo.
Thank you
It's a
so
pleasure
much.
being here with Mo. I love seeing your content too, man.
It's my pleasure. Thank you, buddy.